Hello everyone, welcome to another lovely breakdown with JayFx. All right, so this is the AUDUSD. For those of you who have been following me recently, or by the time you're watching this video, there was a video that I posted not too long on AUDUSD, making a confluence analysis with Elliott wave and smart money concept. On this video, I'm just going to be showing you something different, a little bit different, a different perspective, let me say, using Wyckoff, okay? And it's not going to be that much different from what I showed you on the previous video in terms of long term, which is higher time frame analysis. As you can see here, the trend is bearish. I drew this so that you can see the trend. And if you know me, you understand that I make use of premium and discount a lot. And when I make use of premium and discount, I always make sure that I'm looking at buying within discount and selling within premium. And from this market, you can see we're within premium, okay? Similar to what I made on the first video for the long run. So it's not something different in terms of swing analysis. It's just a daily perspective. Now, to support the bearish idea, the bearish scenario, because as you can see, within 1 week, we had this reaction, okay? On my previous analysis, using L2, I told you guys that if this doesn't get broken, we might be seeing a bearish trend. And that's what we're seeing here. So basically, the difference is that this got mitigated. So as we can see, the bearish internal structure is intact. Okay. So most likely this might be getting cleared out. That's using basic smart money concept, market structure, demand zone, break of structure, you know. So you can clearly see that the bearish structure is still intact here. But at the same time, there's also a bullish structure here that actually is still intact as well. And then if we look at this from that perspective, this could be something like this. So this is still a probability, but if I was to choose one, I would go with the bearish perspective because as you can see, we can't go against the trend. The most recent one is bearish. This is just a much bigger scenario, probably on the weekly. And that's why I want to show you guys what I'm seeing using Wyckoff, okay? So we have two scenarios using SMC now. The one supports that this might be a supply zone supported by this market structure, this high, this low. So this could be a lower high, and market is just testing out the internal structure over here. And we could be expecting price to break out this. Okay, so that will be supported by a head and shoulder pattern for those of you who trade head and shoulder. But at the same time, there's also a different perspective. If you look at it from this being market structure, then we can say this could be a mitigation. And since this is the most recent market structure here, this is a break of structure, we can then say that market structure is likely bearish and this is a weak low. Also, this would be liquidity, and then we might be expecting something like this. And if we're looking at it from the higher time frame perspective, the bearish side should be supported because this is the trend. Okay, drop, base, drop. So I'm just going to show you something in terms of Elliott wave, sorry, in terms of Wyckoff, and then I'm going to leave the remaining one to the markets to play it out. So if you look at this entire range, this consolidation that is happening here, because for me, what I do is that when I have consolidations like this, I use Wyckoff. I try to use Wyckoff to see what's going on the trend and try to identify the most likely scenario using the schematics. So since we're within premium, like I showed you earlier, I'm going to be looking at a distribution. Why a distribution? That's because on the Wyckoff circle, in terms of market structure, we understand that an accumulation happens at a discount price because we're looking for price to go up, right? Then a reaccumulation happens along the way, to reaccumulate liquidity, and then price goes back up. And then when the bullish trend is complete, we then see something like a distribution that accumulates price again and then goes down, and then gets to a point where it does a redistribution to accumulate liquidity and then goes back down. Then the cycle is complete. And that is where the law of supply and demand comes in with rally, base, rally, drop, base, drop. Okay, so Wyckoff is supported with the law of supply and demand, law of accumulation, manipulation, distribution, and then we'd also have there's one other one again that I'm trying to remember. But at this point, you can see how the accumulation plays out. the reaccumulation plays out. Okay. Then we move on to the distribution. We would have this, a distribution playing out, and then a redistribution playing out. So this is how we have the 4 different phases of markets within Wyckoff, and that's supported by supply and demand and market cycle. So I'm just going to show you now why this is a distribution from the weekly time frame, because on the weekly the market is actually at this kind of area, So we're kind of looking for a distribution since we're within premium and we're looking for a bearish price action. Okay. So I'm going to the weekly now. Let me take this out. And on the weekly time frame here, we can clearly see that from this range, price is within premium, right? And then from the consolidation we have here, this would be either a reaccumulation, right, for price to go back up, or it would be a distribution for price to go back down. Now, why do I think this is a redistribution? Why do I think this is a distribution rather than a reaccumulation? And that's because if we look at this area, within this range, we will find out that there are so many voids over here, but there's not much liquidity anymore. There's nothing really. There's no stacked up highs, just a major resistance level. If you look at this point, there's a major resistance level here. But then we have this other block here, but at the same time, there's no internal high, any major internal high here that we could be looking at liquidity or liquidating traders. So there's no major reason for why price should go higher. Okay. And we can see that this high has already been cleared out. So from the weekly perspective, there's no reason to go higher. While if you look at the bearish perspective, you would see that we have multiple lows here on the lower time frame, multiple lows here. Let me take this out. Okay. And lastly, we have lows here, which all this can be tagged as liquidity. So most likely this could be a distribution, but we have no confirmation yet because let me go to the schematic now so you would see why I think there's no confirmation yet. But we have these major swing lows from the weekly time frame. Well, we're currently on the daily that can serve as liquidity. And price just cleared that this one. So let's try to see if this market structure can fit in with a schematic. So let's look at this as primary. Let's label out a distribution schematic. So I'm going to pop up a distribution schematic, yes. Then while I'm labeling this, you would see why, which is which and why I think they're that, okay? So let's call this primary supply. Let me take this down. And also there's a mentorship video for Wyckoff. So for those of you who wants to learn Wyckoff, maybe after watching this video, you find it interesting that I could make analysis using this or break down the market using Wyckoff. You can watch mentorship video breaks down of how Wyckoff works. Okay, I already made the mentorship videos available, and there's a playlist on YouTube where it's all arranged. All you have to do is just go on the playlist, from my channel, search for Wyckoff mentorship, and then you can start learning Wyckoff. Okay, so it's as simple as that. So for those of you who want to learn how I am able to do this, you can do that. That's it's supposed to be AR. Mind you, I can't see the image on the screen. I can only, the editing guy has got it on the screen. So I'm kind of like identifying this stuff from my head. But I think I'm correct with what I'm doing because I'm kind of familiar with this stuff. So we have this. This would be the first sign of weakness. So first sign of weakness. Why am I calling this a first sign of weakness? Because if you look at this low, it cleared out this low. That was not supposed to happen if this was a bullish market structure, sorry, because if you look at this already cleared that liquidity here. So if this was a sign of weakness, we would observe that after price cleared that liquidity, was supposed to break this high. But then the manipulation was done along the way. This strong low got cleared out. So that was a manipulation. And that was the first sign of weakness where this wave came in. So as you can see, this will be the first sign of weakness. So I'm using the logic of what makes these patterns make sense, not the schematic on the screen that you're using to understand the video for. So we're coming from two different sides, but I'm showing you why I'm identifying this as a sign of weakness. Okay. So we then have this. So from the higher time frame, from what I showed you guys earlier, we saw that this was a swing point getting cleared out, a bullish swing point, right? So when we saw this manipulation here, right, price took out a major high, okay? And at the same time, we're seeing that with a Wyckoff distribution schematic, there's a possible tendency that this is actually the UTAD. Okay, so with that confirmation and with price clearing out this high, after this manipulation here, this is also kind of like a confirmation that this could be Wyckoff. At the same time, price gave a test here. Okay, and definitely this would be where I would expect the test, because as you can see, there's another block here, but price did not get to that point. So we could say this is still an open POI. All right. So a distribution 2 popping up the picture, a distribution 2, okay, would support that a UTAD was not supported. This would be a secondary test, and then uptrust action, not a UTAD, and price would do the, but that would be a distribution 2. But at the same time, we could see something like this would be the last point of supply. Let me take this out, because this is losing the law of supply and demand, rally base drop, right? So this would be a supply zone, rally, a base, and a drop. So this is also a supply zone. So naturally, we could say we were expecting the test to be above. But what happened was that price tested the supply zone instead. So let's take this out. And most definitely on the lower time frame, we'd find the test here. But, the market is very tricky. Something like this happening is not is still negotiable. It's still possible. Why do I say so? Because we don't have any major sign of weakness. This is just a minor sign of weakness. We could put an M there. This is like a minor sign of weakness. And then a major sign of weakness will be price clearing out this stacked up lows. That would be the major sign of weakness that, this is possible. But other than that, it's still very, very sneaky. And then I would say something like this happening is still possible. But this is all Wyckoff, and this is if we were actually in a distribution, using Wyckoff method, this is what I would be seeing on AUDUSD. The previous analysis was done using Elliott wave and smart money concept as confluence trading. So now I'm giving you a different perspective using Wyckoff method. So tell me what you think in the comment section about these different methods. And then if you're looking to learn any of them to gain more insights, you could, check out those special mentorship videos on my, playlist. So for now, like I said, I'm just expecting price to either break this low or take out this high, to confirm something like this. Okay. Other than that, then this would be bearish. But this would be what we have currently using Wyckoff would be on. You could check the schematic and see which phase is this. I think this is about to start the phase C. And then if this is not happening, like if there's no major sign of weakness here, then this could be getting cleared out. And maybe something like this could be happening, But either way, a major sign of weakness is needed to call this a bearish market. Other than that, it still looks very bullish. Okay, if you look at it from something like this low, All right, okay, so this is a major key area. We have to see what goes on here. So before we can call in that the bullish market, first area to clear out would be this high. All right, and that will be all for this particular video. Don't forget to subscribe. Remember, this is just analysis breakdown. I'm just breaking down how this method can be done, how you can use these stuffs in the market. The experience of using this comes from your own practice. How long you practice this can tell how much you can understand, what I'm doing. What I'm just doing is identify what I can see, from my own research. So for you to know how to use this method, then you have to practice them yourself, make your own study time, and then try to apply them in the market to see how much you can predict. Okay, so I'll see you in the next video. Bye.